Order blocks are the hidden battlegrounds of the market, where the biggest players, banks, institutions, and hedge funds, quietly place their massive orders. These zones aren't just random price levels. They're where smart money has made its move, leaving behind clues that retail traders can use to their advantage. One of the best indicators on TradingView to visualize these levels is the LuxAlgo order block detector. It automatically highlights key areas where institutions have likely placed their orders, making it much easier to spot high-probability trade zones. You can easily add it to your chart by searching for it in the Indicators section. Once you apply it, you'll see these highlighted regions. Green for bullish order blocks, where institutions have likely accumulated positions, and red for bearish order blocks, where they may have offloaded their holdings. As you can see on the chart, price often reacts to these levels. In this video, I'll show you how to automate trades using the LuxAlgo order block detector, meaning you won't have to manually monitor charts or react to order blocks in real time. Instead, we'll set up a system that detects these key levels, triggers buy and sell signals automatically, and executes trades based on predefined rules. Before diving in, let's see what we're going to do. We'll start by automating these trades in demo mode, which allows us to forward test our setup without risking real money. Once we're confident in the strategy, we'll switch to live mode, where our automation can execute real trades based on the detected order blocks. And the best part? This entire process requires no coding, just a simple setup that anyone can follow. Now that you know what's ahead, let's jump right into the first step. We need to set up a trading bot that can listen for signals from the LuxAlgo order block indicator. This bot will handle two things. It will first simulate trades using virtual funds in demo mode, allowing us to test the strategy without risking real money. Once we're confident that everything is working as expected, we'll switch the bot to live mode, enabling it to execute real trades automatically on our exchange account. After creating our bot, the next step is configuring TradingView to send signals based on the LuxAlgo order block indicator. Whenever an order block is formed, TradingView will generate an alert and send it directly to our bot. The bot will then process the signal and execute trades based on the detected order block. When a bullish order block is formed, the bot will automatically open a buy trade. On the other hand, when a bearish order block is formed, the bot will sell, anticipating a price drop. Also, our bot will give us comprehensive reporting, allowing us to track performance and make data-driven decisions. As you can see in the first report, we have an overview of our closed positions, including the total number of trades, how many were won or lost, the win rate percentage, and the overall profit and loss. This lets us analyze our strategy's effectiveness in demo mode before moving to live trading. The second report breaks down our daily profit and loss over time. This gives us insight into how consistent our strategy is and whether adjustments are needed to improve performance. Instead of just looking at overall results, we can see which days were profitable and which had losses, helping us fine-tune our approach. So let's get started. To create our bot, I'll be using CryptoTailor.io, a platform that allows you to craft your own trading bot without coding. This platform makes it easy to automate trading strategies, whether you want to simulate trades in demo mode or execute real trades in live mode. From the left menu, by clicking on Create Signal Bot, we need to create our bot in 3 simple steps. In the first step, we're going to choose our exchange and trading pair. For this example, I'll go with Binance and Bitcoin. The exchange you choose here is important because the trades in demo mode will be simulated using that exchange's price data. This means that even in simulation mode, our strategy will be tested in real market conditions, just without real money at risk. In the next step, we need to configure capital allocation for our bot. There are 2 options. A static amount, where we allocate a fixed amount per trade, such as 100 USDT, or a dynamic percentage, where the bot uses a portion of our available balance in the exchange when we go live. In demo mode, the bot will always simulate trades using 100 USDT, regardless of the allocation setting. Next, we can also set up risk management for our bot. Although buy and sell signals come directly from the indicator on TradingView, we have the option to define a take profit or stop loss level. This allows the bot to automatically close trades based on a predefined profit or loss percentage, adding an extra layer of control to our strategy. However, these settings are completely optional, meaning you can rely purely on TradingView signals or let the bot manage risk on its own terms. For this example, I set both take profit and stop loss as 5%. And in our final step, we need to name our bot, choose whether it will run in demo or live mode, and set its initial status. First, we enter a title for the bot. This can be anything, but it's a good idea to include the strategy name and trading pair for easy identification. In this case, I name it Order Block, so I know exactly what it's doing at a glance. Next, we select the bot trading type. If we want to test the strategy without risking real money, we choose Demo Mode, where all trades are simulated using real market data. If we're ready to go live and execute actual trades on our exchange, we select Live Mode. For now, I'll keep it in Demo Mode so we can validate the automation before making real trades. We also decide whether the bot should start in active or inactive status. If we choose active, the bot will immediately begin listening for TradingView alerts and executing trades. If we select inactive, it will be created but won't execute any trades until we manually activate it later. Additionally, there's an option for Telegram notifications, which allows us to receive real-time updates whenever the bot executes a trade. If you want instant alerts on your phone, you can enable this option, but before that, you need to connect your account to Telegram. And finally, by clicking on Save, our bot is ready. Now, as you can see, we've received a buy signal, a sell signal, and a webhook URL from the bot. These are the key pieces of information we need to connect TradingView to our bot. Now it's time to configure TradingView to send signals whenever an order block is formed. The way this works is simple. We'll set up TradingView alerts so that whenever a bullish order block appears, it will trigger a buy signal. Similarly, when a bearish order block forms, it will trigger a sell signal. These signals will be sent to our bot using the webhook URL we just received. So essentially, instead of manually entering trades when we see an order block, we're telling TradingView to automatically send the order block signal to our bot, and the bot will take care of executing the trade. This way, the entire process becomes automated, from signal detection to trade execution, without us having to sit in front of the charts all day. Now, let's move on to TradingView and configure these alerts so our bot can start receiving and acting on order block signals. In TradingView, the first step is to select the trading pair and time frame that we want to use for our strategy. This is important because the LuxAlgo order block indicator will detect order blocks based on the chart we're viewing. For this example, I'm on the BTC USDT chart, and I've selected the 4-hour time frame. From the top bar, we need to create two alerts, one for a bullish order block formation to send a buy signal to our bot, and another for a bearish order block formation to trigger a sell order. For the buy order, we first choose the condition as order block detector, and then select bullish order block formed. This ensures that our bot will receive a signal whenever a new bullish order block appears on the chart. Next, we set the trigger to once per bar close. This is important because it helps reduce false signals by ensuring TradingView only sends the alert after the candle has fully closed. If we don't use this setting, the alert could trigger mid-candle and then disappear if the price moves, leading to inaccurate trade executions. For the expiration, we choose a date until when we want the alert to remain active. If we want it to keep running indefinitely, we can set it to a far future date, so we don't have to constantly reactivate it. In the message section, we need to enter the exact buy signal that we received from our bot. This message contains the necessary data for our bot to understand and execute the trade. So I simply copy and paste the buy signal message that was provided by our bot. Next, in the Notifications tab, we need to set the webhook URL. This is how TradingView knows where to send the alert when the condition is met. Instead of just showing a pop-up or playing a sound, TradingView will send the alert as a request to this URL, allowing our bot to process it and execute the trade automatically. So I simply copy and paste the webhook URL received from the bot. And by clicking on Create, whenever a bullish order block is formed, TradingView will instantly send the buy signal to our bot, ensuring real-time trade execution without any manual intervention. Now we need to repeat the same process for the bearish order block formation as well. The entire setup is identical to the previous step, but this time, in the condition section, we select bearish order block formed instead of the bullish option. Just like before, we set the trigger to once per bar close to ensure that the alert only fires when the candle is fully closed, reducing the chances of false signals. In the message section, we need to use the sell signal that we received from the bot. This tells our bot to execute a sell trade whenever a bearish order block is detected. Next, in the Notifications tab, we paste the same webhook URL so that TradingView knows where to send the alert. This way, both buy and sell signals will be sent directly to our bot, keeping everything automated. Finally, we click on Create, and our alerts are now fully set up. TradingView will now monitor the market and automatically send signals to our bot whenever a new bullish or bearish order block forms. Now let's get back to CryptoTailor and check our running signal bots. As you can see, our bot is now active in demo mode, fully set up and ready to take action whenever TradingView sends an order block formation signal. At this point, the bot is waiting for a bullish order block alert to execute a buy trade. Once it receives the signal, it will immediately open a position based on our predefined settings. From there, it will continuously monitor the market, tracking price movements to manage risk according to the take profit and stop loss levels we configured earlier. At the same time, the bot is also watching for a sell signal. When TradingView detects a bearish order block and sends the alert, the bot will receive the signal and automatically close the position, locking in profits or minimizing losses based on market conditions. After a while, we can start analyzing our bot's performance by checking the Closed Positions menu. Here, we can see a detailed breakdown of how our strategy has performed, including the total number of trades executed, the number of winning and losing trades, and the total profit and loss generated so far. This helps us evaluate whether the strategy is profitable or if any adjustments are needed. Additionally, from the Reports menu and the Daily P&L chart, we can track the bot's performance on a day-by-day basis. This gives us a clear view of how our bot is performing over time, identifying profitable days, losing streaks, and potential areas for improvement. By monitoring these metrics, we can make data-driven decisions to optimize the strategy and fine-tune risk management settings. Now you've seen how we can automate the LuxAlgo order block indicator in demo mode to simulate trades. Let's take it one step further and see how we can connect our bot to an exchange and start live trading with real money. From the Exchanges menu in CryptoTailor, you can select your preferred exchange and connect the bot using API keys. API keys are the safest method provided by all exchanges, allowing the bot to execute trades on your behalf without granting full access to your funds. Instead of manually placing trades, the bot will use these API keys to send and manage orders securely, following the exact strategy we configured earlier. Most exchanges allow you to generate API keys with specific permissions. For example, you can grant access to place trades, but disable withdrawals, ensuring your funds remain secure at all times. This way, the bot can only execute trades and manage positions without having the ability to withdraw money from your account. If you're not sure how to set this up, CryptoTailor provides step-by-step guides for each supported exchange, walking you through the entire process of creating and linking your API keys. Once the connection is established, you can easily switch the bot to work in live mode using real money. And that's it. If you have any questions or need help setting up your bot, you can always submit a support ticket, and the team will assist you. If you found this video helpful, make sure to like, subscribe, and leave a comment if you have any questions or suggestions for future videos. Thanks for watching. See you in the next video.